Good morning, good evening, everyone. Thanks for taking the time to join us during this meeting. As we have actually walked a journey, and today we are going to go through debt management solutions. What is it that you should do when you're thinking about what is the right debt? Should you get into debt and things like that? So we are lucky to have been joined by Pauline Wairimo. Pauline has vast experience in matters investments, having worked in the banking sector. And today she's going to take us through debt management. Please make sure that you ask as many questions as possible, because we always don't get to get people like Pauline online to help us in terms of planning and coming up with what we need to be doing with our finances. So over to you, Pauline. Maybe you can introduce yourself as you take us through the presentation. Karibu, and then I'll be taking you through. I'll just be working on the on moving the slides. Karibu.
I don't know if you can hear me now.
Yes,
thank you, Elizabeth, for this opportunity, and thank you everyone for tuning in for this session on debt management, especially at this period where we're experiencing the pandemic. So my name is Pauline Wairimo. I'm a former banker and now a personal finance coach by training. I love to engage people on their personal finances to be able to achieve a financially free life, as in life in abundance, which is maybe one of the things debt-free. So to begin with, I would like to give an objective of why we are doing this. So today's training program, the main objective would be first, how to manage debt, and secondly, how to prevent yourself getting into bad debt. Liz, I don't know if you can move to the next slide so that I begin the training. Okay. The previous clip would have been the objective of the training. It's fine. What I said earlier was that the objective of this training are two things. One, to help us manage debt, and two, to prevent you into getting into a bad debt. And we'll get to see, is there a good debt or bad debt? Now, what is the definition of debt management? Debt management simply means simply means how one can deal with debt. And debt is anything that you owe. Usually it would involve a repayment plan, and there's a process to that, and also a repayment period or time. Now, there are very many types of debts, and I'll just look at three today. One of them I call impulse debt. Just like the name suggests, this is from what you buy by impulse. And usually you would incur this either by using your credit card or going for bank overdrafts. And how do you get into this? It's just because you simply wanted to have the things that you bought, the items that you bought, that credit card, by using that credit card or that bank overdraft. For example, one of these impulse debts is where somebody can decide to just take a trip to Dubai or go to buy furniture on loan. So basically, you use that card to buy non-essential items. Then there's a second type of debt, which is called premeditated debt. Now, this debt I call a good debt. This one is taken after a very careful thought and also after a lot of planning. And an example of this debt would be mortgages. You can take a house, you can buy a house on a mortgage, or you can buy land or student loans. For example, if you want to take your child to university, some parents have decided that they can of loan I would call a crisis debt. I mean, the third type of debt, sorry, not loan, is what I would call a crisis debt. A crisis debt is one that you incur because of a misfortune. And a misfortune would be something like maybe death, a job loss, a sudden job loss. For example, this one where we're experiencing this pandemic, many of us unfortunately have lost our jobs. There's also something like a terminal illness, e.g. cancer, where it is quite expensive and you have to be treated over a period of time. So those are the three types of loans. So in summary, there's the impulse loan, which I call bad. There's premeditated loan, which I call good. And there's also a crisis debt, which is quite ugly. So there's a good, the bad, and ugly. Now, how do you get into debt? We've always wondered how people get into debt. The first way you can get into debt is if you do not save any money. The second way you can get into debt is if you do not budget. And the third way is if you actually do not stick to that budget. You might budget, but you do not stick into it. And then the fourth way is when you do not prepare for emergencies. And as I had said earlier, another way, a sure way, is to get a credit card. Then the other fifth way perhaps is if you take your children to an expensive school, or maybe even yourself to an expensive college or university. Those are the surest ways for you to get into debt. Now, I would like us to discuss again how not to get into debt. What is the way that one can avoid? Because we've told you how to get, how you would get, but how can you not get into debt? One is to start practicing a saving culture. We hardly save as a community or as a nation. And this is because this wasn't really instilled into us when we were being socialized as children. So the way not to get into debt is if you can try to save before you spend. In budgeting, there's a rule we call 50-20-30 rule. And the 20 here stands for savings. So if you can practice, and it comes with practice, it's not a thing you just wake up and do, is that get 20% of whatever income that is coming through your hand, 20%, and then you can spend the rest, 50 on essentials and 30% on non-essentials. The other way not to get into debt is live within your means as much as possible. Many of us have been tempted beyond reasonable, beyond means to just live above our means. And then also, we need to establish or start an emergency kitty. On a normal, the good rule is that you should have 3 to 6 months emergency kitty. That means 3 to 6 months of your monthly expenditure. But with COVID, it has taught us now maybe 18, because this thing started in March, March, and now we're in June. So if you had put away 3 months emergency kitty, by now it is exhausted. And here we are saying we are not even sure when this lockdown will end. So I would recommend now going forward, try and boost that kitty to even 18 to 24 months. The other thing on how not to get into debt is please think of how you use every shilling. Make use the most out of every shilling that you have right now. If you can save on something, I was telling Liz earlier on that I'm happy it's raining in Nairobi today, because I started, when this thing started, I became a flower farmer at my backyard. And in the process, I've also managed to grow some herbs, some rosemary, some oregano, some lemongrass. And I'm hoping that once zikishika, because now it's raining nicely, I'll be able to save money on herbs. And why can't you? Find ways to get good deals. Now people are buying food directly from the farm, so you're better off getting that from producers who are everywhere on the roadside. So think and make most out of every shilling that you spend. Now, the next slide I would like us to discuss is, what if you're already in debt? What happens if you've already entered into that scenario, or you're wondering now, maybe you're threatened because your income, as we said, is no longer there, maybe on compulsory leave, or you don't even know your business shut down. So these are the tips I would give for managing or eliminating debt. One of the things is that please find new sources of income. Is there something that you've discovered while you've been on this lockdown, e.g., a talent or a gift that you've always had? Can you then monetize it? That can be a new source of income. Or you used to be a marketer and now you're locked. I mean, like, there's nothing to market. Can you then reinvent yourself or pivot and start home deliveries because you have a car parked outside and you have friends who are eating? So try and reinvent yourself. I saw a poster of in one of the groups I'm in, and there's somebody who owned a laundry, and I guess nobody takes their clothes anymore, or many people then don't take. So now he started a home delivery for laundries. He picks them, after a day or two, he drops them. So please find a new source of income. And that guy is going to survive because he's still doing laundry, yes, but he has reinvented ways of doing it. The other thing is, please consolidate all your debts. If you have these very many debts, small ones, consolidate them into one big amount, and maybe we look at how you can possibly then get one big loan or one big source of reducing this amount. The other thing is, please avoid unnecessary spending. Stick to the essentials. This isn't the time to incur unnecessary spending. So defer big spendings, e.g., renovations. Can that wall that you wanted to put up in your compound wait? Can that car you wanted to upgrade wait? Is it possible that maybe the degree you wanted to do in June, you can actually defer so that you avoid unnecessary spending? The other thing I think I don't know, we should try and live on less than you earn as much as possible so that you're able to save some amount. Then also, if you have loans, as we said, try and get rid of the costliest or the most expensive loans first. List all your loans. And in particular, if you have the mobile app loans, or you have something like from the microfinance institutions, or anybody who had lent you with very, very high interest rates, please try and eliminate those ones first. And right now is a good time to also negotiate for lower rates. Everybody is giving an ear to people who owe them. So do not shy off from going to talk to the people who you owe, either a bank, a microfinance, even the mobile app guys. Talk to them. See if you can negotiate for lower rates. Now, the last item I'd like us to discuss is, now, if you're thinking of getting into debt, before you get into it, remember the scenario I've described before was for somebody who's already in it. If you're not that terms and conditions of that debt. If, for example, you're getting it from the bank, please read in between the fine lines. This is where we're normally caught. I think it's usually the anxiety of getting that money, the process that you've been taken through of applying. It's usually so tedious. So you're so eager to sign. I'd like you to take time to read the terms and conditions, because that's where we're normally caught, especially when we default. The other point is that you need to assess your finances right now, and most importantly, your ability to pay. Are you just taking it because you can't meet your daily needs? Is the reality that you are now on a reduced pay? Is the reality that you have closed your business? So if you take it honestly, what income were you anticipating to use to pay that loan? So assess your finances and the ability to pay it to avoid embarrassment in future, e.g. being auctioned. Also, you need to consider the magnitude of the debt. And here I'm thinking of things like that amount that you're taking, the repayment period. For example, if it's an unsecured, how much then do you really need? And how long will you take to pay? Is it 48 months? Are you better off paying it in 24 months than 48 months? Because also the interest rates normally differ. If you take a loan for a longer period, then the interest rates might be a bit lower or easier. If you take it for a shorter period, you're charged a higher interest rate. Then there's also issues like insurance policies on that debt. For a loan, maybe from the bank or any other place, some people would want to insure against that loan to mitigate it. When employees borrow, mostly it's their employers that's like sort of stand surety. And many employers have agreements or MOUs with banks. But when you're fired, when you lose your job, or when you pass away, what happens to that institution that had lent you? So there's an insurance policy on the debt that you have to pay so that it mitigates the lender against disability on your part, death on your part, or loss of income. Also, if it's something like a mortgage or land, there's an annual pay, or even a car loan, there's an annual amount that you pay for insurance. Consider that so that you understand what that policy says. When in an unfortunate event you pass away, will it then be written off so that your next of kin does not have to struggle with the debt? Finally, I would like you to know that good debt can actually help you achieve or acquire assets. There's no need to fear debt. I always say, do not fear debt. As long as you know why you're taking it, in terms of the reason, is it to acquire an asset, and how you will pay it. So remember that mismanagement of debt will always lead to an unmanageable future. So there's a good, bad, and ugly debt, and you need to really consider those three scenarios before you indulge or engage yourself into it. So thank you very much for listening to me. Elizabeth, I want to hand the meeting back to you. In case there are any questions or clarifications, I would be happy to address those. Back to you, Liz.